Welcome back, Adam here, and today I'm looking at 15 disallowable expenses if you're a sole trader. So these are expenses are not permitted for tax purposes. Even if you have paid them through your business, then they will need to get added back to your profit figure when calculating your tax liability, resulting in an increase in tax payable. Before we get into it today, don't forget to like the video and subscribe for more helpful tax content. Starting at number one is gym memberships. Now, the argument is frequently made by self-employed business owners that their business is often reliant on the income generated from one individual. So keeping that individual in good health through a gym membership is a sound business decision. However, HMRC do not view it this way and disallow any gym memberships paid by the business. There may be the odd exception to this rule, for example, a personal trainer who requires a membership in order to gain access to a gym with their clients. However, these are few and far between. At 2, it's the cost of commuting, which can be a bit more complicated. This is because commuting is the cost of traveling from your home to your permanent place of work. Anything else is business travel, which includes traveling to a temporary place of work, and all business travel is 100% allowable. So if my self-employed business operates from an office in central London and I get the tube from my home to the office, then that would be commuting and the cost of the ticket would have to be disallowed. On the other hand, if my self-employment required me to travel to a temporary workplace where maybe I just need to work for a few hours or a few days, then that's likely to be business travel and would be 100% allowable. The same would apply to other types of travel, including mileage, although mileage also needs to be paid in line with HMRC's guideline rates, which are on screen now. Up next, it's subscriptions to platforms like Spotify or Netflix, even where that subscription is only utilised whilst you're at work or you're only claiming for part of the subscription cost. HMRC are very clear that these type of subscriptions must be disallowed. Then we've got everyday clothing. Again, this is one where you'll need to use a bit of judgment, as there are some items of clothing that are allowable, but this tends to be protective and safety clothing that is required in your job. Anything else, including clothing that you purchase specifically to wear whilst working, needs to be disallowed. Moving on to our 5th disallowable expense, this time it's childcare. For a sole trader to pay for the cost of childcare directly through their business would not be allowable and would need to be added back for tax purposes, even where that payment has already been made. It is possible though for sole traders to benefit from tax-free childcare, but this has to be done via a tax-free childcare online account, and of course conditions and restrictions may apply. At number 6, we've got parking and speeding fines. From my experience, this is one that the self-employed always find difficult to swallow, and somewhat understandably so. A self-employed delivery driver, for example, who gets a parking ticket whilst out working a 10-hour shift, is not able to claim this as an allowable expense, despite the fact that their job makes them far more likely to incur this type of expense than the rest of us. HMRC's stance, though, is that no self-employed business can claim for the cost of speeding and parking tickets. Next up, it's your daily meal. Whether that's breakfast, lunch, or dinner, these costs are generally disallowable for sole traders. As is often the case though, there can be exceptions to this rule. For example, if you were working away from home and needed to stay overnight, a reasonable amount for your subsistence, your meals, would also be allowable. At 8, we've got hospitality, which is another way of saying entertaining. So taking your prospective clients or your suppliers to the races or out for a few drinks won't be an allowable expense for your business. If your business employs others, then a small amount of staff entertaining for a Christmas party or a summer social would usually be fine, but even this needs to be restricted to ensure that you don't exceed HMRC's guideline amounts. Otherwise, there can be additional tax implications for the business and the employee alike. At 9 is home renovations, which for many will sound fairly obvious. Why would your business be able to pay for your kitchen extension? It wouldn't make any sense. However, the argument could be made by someone who runs the business from their home that actually a percentage of the build cost for a new kitchen should be allowable. Of course, HMRC don't see it this way, and it would be in fairly rare circumstances that any substantial home renovation works would be allowable for a sole trader. Our 10th disallowable expense is political and charitable donations. Even where you think it's a worthy cause, for tax purposes at least, HMRC do not agree, and you would need to add back any donations made by your business when calculating taxable profit. As an individual, you may be able to attract some tax relief on certain charitable donations, so you'll be better off making them out of your own pocket rather than through your business. At 11, it's gifts to customers. Typically, any gift that you make throughout the year to a customer would be considered entertaining, which we've already covered earlier in the video, and it would therefore be disallowed. The exception to this applies around Christmas, when actually a business can get away with giving small gifts to their customers or their clients, providing the value doesn't exceed £50 and the gift isn't food, drink, tobacco, or a voucher that can be exchanged for goods or cash. Oh, and did I mention the gift needs to clearly display your business logo? Way to take all the fun out of Christmas, HMRC. Next up, it's loan repayments. So if you take a bank or business loan to fund your trade, then this one will apply. Just note though, it's only the capital part of any loan repayment that is disallowable. The interest element is allowable. It's also worth pointing out that there can be restrictions on this if you use the cash basis of accounting, which only allows the individual to claim £500 of interest and bank charges in a tax year. At number 13, training courses. Again, this is a bit of a grey area because some training courses are allowable providing they are improving skills and knowledge that you currently use in your business. They are keeping you up to date with technology that's getting used in your industry. They're developing new skills and knowledge related to changes in your industry, or they're developing new skills and knowledge to support your business. This would include things like admin skills. So the defining factor here is that the training needs to be specific to the trade or industry that you operate in, although you can potentially expand that to a back office function if necessary. If the training doesn't meet these criteria, then it has to be disallowed. An example would be a plumber who takes a furniture making course. Even if they plan somehow to sell furniture through their business, those are two completely different trades and the course would not be allowable. On top of this, if you have to undertake any training in order to start a new business, then this is also disallowed. At 14, we've got domestic help, which includes cleaners at your home, gardeners and nannies. Even where this help allows you to spend more time focusing on your business, this type of expense has to be disallowed in full. And at 15, our final disallowable expense is any goods or service that you've taken from your business for private use. An example would be where you're buying and selling clothing. If you take a couple of t-shirts for yourself, then the cost of these t-shirts would have to be disallowed when calculating your tax liability. The same would apply to a service-based business. So if you build websites for clients and you decide to build one for your own personal blog, then all of the cost associated with building out that website would need to be disallowed. And just to finish today's video, I want to explain what actually happens if you do claim one of these disallowed expenses. It's important to remember that the self-employed report their income under the self-assessment tax system, which means HMRC expect you to know these rules or consult with someone who does, and then report your information accurately. If you do make a mistake and claim one of these expenses accidentally, then you can make corrections to a return within 12 months of the filing deadline. If you you knowingly and deliberately claim disallowed expenses and report this to HMRC, this is considered tax fraud and would likely result in you paying the tax due, a bunch of interest, and a potentially significant fine. You should also remember that HMRC conduct random and targeted tax investigations, so make sure you retain supporting documentation for any expenses that you do claim. That is all for today. Thank you for watching. See you next time.